Hello and good morning, all my wonderful Bitcoin investors and MetaFam. I want to give you guys it's going to be about a 10-15 minute video, but the reason is because I need you to understand that now is the time to deploy capital into Bitcoin mining. You see, currently there's 900 Bitcoin that are mined daily, and a downward trending Bitcoin price has forced weak miners to capitulate their Bitcoin treasuries and mining rigs, as you guys well know. Now, there is a powerful indicator that is rarely used by the public, and I would say not many miners actually know about it because they haven't been in the mining game as long as we have. And this metric is called the hash ribbon metric, which was created by Charles Edwards. So essentially, the hash ribbon metric allows you to visualize when weak miners are shutting off machines. Now, what I mean when I say weak miners, I'm talking about mining companies or independent mining companies that have not de-risked or created strategies or over-leveraged themselves and are now currently shutting off their machines. Bitcoin is currently about 40 to 50 days into its most recent miner capitulation event. The time to get exposure to Bitcoin mining is during these capitulation events, and I've been through 3 of them with my team. If you enter the mining market during a capitulation event, you are capitalizing on the weak miners, putting short-term downward pressure on both the price of Bitcoin and the price of mining rigs. And so we have seen this in just the last couple months, even just in the last 30 days. So let's talk about this. What is the hash ribbon metric? Well, this indicator is a valuable metric because it has proven reliable in spotting opportunistic entry points in Bitcoin in the past. From a risk-reward perspective, enabling investors to enter the market and buy low before fear of missing out or FOMO sets in. Though whether this accurately predicts the Bitcoin price is another question. But I'm never worried about the Bitcoin price really, and I've never have been, because it's always been a matter of accumulating as much Bitcoin as possible ever since I got in the game at $2.52. So the question we have to ask is miner capitulation a bottom indicator? Well, having been through 3 cycles and using this hash indicator for so long, I'll tell you from my own personal experience, absolutely. But let's get it from the main man himself, Charles Edwards. So Charles Edwards is the founder of the quantitative asset management firm Capriole Investments. He says that the Bitcoin price and hash rate are correlated in a reflexive cause and effect relationship. Quote, hash rate drops and subsequent recoveries have marked most, if not all, major Bitcoin bottoms, he said. And so what is this thought process? It's relatively simple. When some miners would start being driven out of the market, shown by a significant drop in Bitcoin hash rate, further market pressure ensues as miner profit margins are squeezed. Also, intense market pressure was needed to cause that capitulation in the first place, as miners are usually seen as very resilient players in the ecosystem, meaning miners are usually the last ones to go under. And so as we begin to see miners, independent and large, go under or start liquidating Bitcoin to keep themselves afloat, this is a huge indicator that the bottom is near or daggone close. Given the magnitude of the supply controlled by miners and the general level of high efficiency in their businesses, when miners are selling, the worst has often occurred, Edwards explained. As a result, price and hash rate recover out of this miner capitulation has historically marked major price bottoms. Edward defines miner capitulation as a measured decline in Bitcoin's total hash rate in an order of 10% to 40% decline. To better spot such an event, the quant analyst developed an indicator called hash ribbons. So, can these hash ribbons really predict the Bitcoin price bottoms? Well, you can find hash ribbons on TradingView. It's publicly available on TradingView. It's an indicator that's essentially made up of 2 simple moving averages, or SMAs, of Bitcoin's hash rate, the 30-day and the 60-day SMA. A downward cross of the short-term MA on the long-term MA marks the beginning of a capitulation period, whereas an upward cross spots its end. Edward argues that buying Bitcoin at the end of a miner capitulation period produces outsized returns for investors, as the worst is believed to be over and the market is beginning a recovery. Quote, to date, I believe it's the best publicly available long-term buy signal, but the reader should make an assessment on that, he said. Now, we have followed these hash ribbons since 2016, 2017. And here's some data that I pulled when we made decisions in 18 and 19 for 20. So in 2020, for example, the hash ribbons indicator flashed a buy signal on 3 occasions. April 24th at 7505, 7,505, July 12th, 9,306 per Bitcoin, and December 2nd at 19,226. After 1 year, those buys generated returns of about 567%, 567%, 255%, and 194% respectively. And this is when we got in. We got in the 2018 and 2009 bear market, and the hash ribbons indicator flashed the buy signal on January 10th, 2019. Bitcoin closed at 3,600, 36,227 on that day, only 16% higher than the cycle's low of 3122. So we were basically at the bottom when we invested more into Bitcoin and we invested more into Bitcoin mining. This was an amazing time to buy miners at the time. It was like $2,000 per unit mining Bitcoin. That was around $3,000 to $4,000 a pop. I mean, we are essentially at this same moment again. Remember, Bitcoin's only about 50 days into its most recent minor capitulation event. Per my own personal experience, we're about halfway through. So I would say that if we need to be looking out the next 30 to 60 days. It's July 16th, 2022. I'm saying August, September. In the next 30 to 60 days, we need to make a purchase decision to go even deeper because the bottom is here. We're not going to find it perfectly, but I tell you, we're basically replaying the same play that we've done twice already. Okay? You buy miners, you get deeper at the bottom. So let's talk about this year. This year, minor capitulation helped spot another opportunistic decline in price, and recently we saw strong evidence for major minor capitulation in June, as proven by the $30,000 and the $20,000 price drop following the hash ribbon capitulation signal, and the subsequent 30% drawdown in minor treasuries, and the $4 billion in minor loan stress news in June 2022 also helped as well. Indeed, hash ribbons flagged the beginning of minor capitulation on June 9th, and our team saw it. And that's when some of our first videos came out to you guys, our investors, letting you guys know we knew this was coming. We're a month later. We're still true. We're seeing it. So we saw the capitulation on June 9th of this year, indicating that further stress could come to the market. In the following 9 days, Bitcoin dropped below the 2017 high, nearing 17,500 on June 18th. It's awesome to see these functions work. As it would be discovered in July's public filings and production update releases, many public Bitcoin miners sold thousands of Bitcoin in June, and to date, only Marathon Digital and Hut 8 have continued to deposit monthly mined BTC into custody. We saw it June 9th. We saw it the week after. Massive capitulation, lots of stuff in the news in the second half of June. The ribbon, the hash metric flagged it again. That's why we were all hot and bothered about it, because it flashed. We knew we were getting close. And that's why I'm creating this video for you guys. Here's another guy who's clearly smarter than I. Fred Thiel, the CEO of NASDAQ-listed Bitcoin miner Marathon Digital, told Bitcoin Magazine that strategies based on minor capitulation period assumes what has been a good rule of thumb in general markets, that those deep within the industry have better information than those on the outside. We have deep knowledge in the industry. We see everything. We see the macro, the micro. We're in with the vendors. We're in with the consultants, the contractors, the lawyers. They're all telling us what these metrics have already shown us. And he goes on to say, typically in economic markets or financial markets, when the person with the best information acts, it's an indicator of the surest place in the market, he said. Thiel continued to explain that a miner knows specific information, such as what their operating cost is, what the cost to mine one Bitcoin is, and what the Bitcoin price is. They can then leverage that information to decide on a course of action, including either liquidate their positions and their Bitcoin holdings, or even cease operations if it reaches a point where it's too unprofitable. We have a huge benefit on our side. because we don't have any of that problem. We don't have any over-leveraged debt. We own our own facilities. We have consistent energy that's producing from Duke Energy right into our systems. So we don't have all the baggage, all the historicity, all the negative juju that a lot of these other miners have. He goes on to say, Mr. Thiel, that when miners start selling their Bitcoin holdings, they're at a point where that's their best alternative. And so you would assume that that would indicate the bottom, Thiel said, which goes very well with the hash ribbon function. So increasing Bitcoin mining now, we're able to buy rigs at a huge discount, directly own the assets, right, the mining rigs, that can appreciate with the price of Bitcoin and start passively earning even more Bitcoin every day. Bitcoin is an emerging technology. It's an emerging monetary technology that is becoming exponentially more scarce over time. We got to collect them all. In mining, it is a smart way to accumulate a sizable amount of Bitcoin. While there is no guarantee that this miner capitulation is over now, and a grim macroeconomic outlook could bring further pain, but historically, buying Bitcoin and Bitcoin mining rigs at 70 to 80% off all-time highs is a pretty significant entry point. We here have been doing this for over a decade now, and I have original ant miners that are sitting right in there, for example. So far, with our inside ball, our inside knowledge, access to many vendors and Telegram group prices, we see the inflated prices coming down. We're also hearing of massive liquidations and vendor contract conflicts that are being resolved at much lower prices per terahash to keep infrastructure moving along. In sum total, I'd like to mine a lot of Bitcoin for the next the bull cycle coming up. And frankly, it would be a most excellent cycle to repeat again. I'm telling you guys, now is the time. We got 30, 60 days to find the next bottom so that we can maximize purchasing of massive amounts of Bitcoin miners so that we can be considered soothsayers and fortune tellers when we have mined 4 to 6 times more than anyone else during the worst economic downturn since 1981. Amazing. I hope this is helpful, guys. Be encouraged. We're going to the moon.